Good morning, rise and shine. Cheers. Today I want to talk about charts. And if you're a day trader and want to trade in this, volatile environment, then it's good to look at support and resistance and knowing when to set your stop limit so you can get out and you don't take too big of a loss, because you never know. Things can change direction quickly in this environment, as we know. So I wanted to go over a little chart here with you. So let's say this is your chart, which, isn't too, this would be pretty similar to what some charts would look like actually right now, where it starts, it started up, it's come down, and then it's starting to come back, and it looks good, but you don't know if you're in a bear trap, or if it's going to break out. So right here you can see it's doing a little W, which you like to see the W, the head and shoulders pattern, which if this can get out above this level, right, that's a good sign. Little resistance there. And then the next level up here, as you see what it used to be at, if it pops above that, that would be a bullish signal there. So this W, some people, can buy right here and take the chance to see if it breaks out above where it was, or you can wait until that breaks above that resistance level right here to make sure. But the key here, what I want to talk about today, is putting your stop limit in, or your stop loss, or trailing stop, however you want to do it. I do a stop limit so I can do a dollar amount and see exactly where it's going to sell out. So right here, if you're at this price right here, right now, I would be setting my stop loss right here, just below that support zone, right below the W, to make sure that I am not taking a big loss, especially if you need that capital for another day's trading. That's where I'd be setting it. And especially, if you want to take a little more risk, you can always put it down here, more at the next support level, just below that. And it's just about how much risk you want to take and where you want your percentage loss to be. Or again, maybe, hopefully, ideally, you bought in here, right? And then if you're put your stop loss right here, then you're still making some money. So I like to, do that. Ideally, once the stock is going up, you can set your stop limit number, or dollar amount a little higher each time and follow it, which that's an ideal situation. But sometimes it doesn't pop as you expect right away, and that's when you got to cover your downside when you're a day trader. So like I said, especially in this environment where things could get ugly here, going into Q4, you want to protect yourself right now in this environment. So set those stop limits, okay? And like I said, if it does pop right away, you can increase those stop limits or put it higher, hopefully where you're in the green making money. And then, as it goes up, you can keep setting it a little higher, and then eventually it'll sell you out, but you made a profit on it. So that's how I would play it, just to be safe. Just a little tip how I do it. If you're a long-term trader, like I said, and you can handle this volatility for the next few quarters, then it won't matter about these charts. Just buy and hold. And like I said, one day, next year, 2 years, whatever it is, you're going to get paid off with the prices right now. But if you're worried, like I said, and you need that capital right now and you're a day trader, watch out for these there's a lot of bear market rallies, as they say right now. So you can make some money off of them, but you got to know when they get out too. So just a little tip for you today. So have a great day, everyone. Take care.